As this decade comes to an end, Bespoke Investment Group is looking at how the last 10 years compare to previous decades. Paul Hickey, co-founder of Bespoke, joins us now. He's at the telestrator. And Paul, you've got a couple of charts to talk us through on this topic.
Yeah, I do. So, we have 2 weeks left in the year and the decade. So we just want to see how things stack up this decade compared to prior decades. Now, it seems when you talk to investors, everybody just thinks the market's done nothing but go up in the last decade, which it has been a very strong decade. So we're up about 185% in the S&P 500 so far in the 2010s. The 1990s, though, we were up 315%. 1980s, 227%. And the 1950s, 257%. So it ranks as the fourth best decade for U.S. equities in the last 110 years. But we always hear references to the 90s. In the 90s, we were up 315% after a decade where we were up 227%. So this is nothing compared to this, I think. So I think in that respect, it has been a very strong decade for stocks, but nothing uncharted or off the beaten path. What makes this decade unique, though, if we move along to the next slide, is if we look at the standard deviation of returns, just how much the returns have differed year to year. This decade has been the calmest equity market we've ever seen in U.S. history. So for all the talk about how, headline to the next, how things have been so over the top and so extreme, the weakest year this decade was a 6% decline, which was last year, which there's only been 2 other decades where we saw even a less than 10% decline in any year. So this is the mildest, weakest year. And the strongest year was 26%, and that is the fourth weakest of the best years for any decade. So it just goes to show that things are very calm in the last 10 years, despite what most people would have you believe.
If we went back to the first chart whilst we discussed, Paul, I wonder whether if you focus in on that 80s, 90s return, given that, of course, we're now questioning whether the next decade can be as strong again like the 80s following the 90s showed, stripping out all other factors, was economic growth through both those decades strong enough to support that? I.e., if we're going to see a repeat of what we've seen in the last decade, next decade, do we need to see very strong growth throughout that period?
Well, so for starters, I think to expect a decade like this past decade again, I think is a little bit, too much cake.
Right.
So to speak. But I think we can definitely have a positive decade here. As long as the key is the 80s and 90s, there were periods of tranquil economies, steady growth. This is the only decade we've seen in U.S. history, again, that we didn't see a recession. So I think as long as you get economic growth and steady, it doesn't have to be gangbusters, but if you have steady growth as well as a Fed that's at the market's back, which I don't think anyone would argue otherwise right now, you can have decent returns moving forward.